Okay, guys, so now we shall be starting with the chapter, a very special chapter, which is chapter 0. And as you can see, the name, it is going to be about the fundamentals about the auditing subject. Okay. And I feel, guys, the understanding of these fundamentals are very important for you to have a overall, great, good concept about the entire subject. So let's discuss about the fundamentals of the subject. Okay, now what I've done here is, if you can see, there will be a lot of topics which we are going to cover under the head of the fundamentals. For example, we have the topic of the audit process. Then there we are going to discuss few common words, terminologies, which is going to be used throughout the subject of auditing. Let's say true and fair, what do you mean by material misstatement, fraud, error, all these topics. Okay, and then because I told you the majority of part of our syllabus will revolve around the concept of standards, I will also discuss some basics about the standards in this particular chapter. Okay, and before we can even start with the standards, I would also discuss few important terms which will be used in the standards. Okay, so this particular chapter will build your base so that we'll be able to cover the upcoming chapters of standards in a with great clarity. Okay, so let us now just quickly brush up all these concepts. Okay, now first thing, guys, what is audit? All of you know this, that it is independent examination of what? Financial information of an entity. This is a definition which you had covered at the intermediate level also. So audit is independent examination of financial information of any entity. This entity can be profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. So I just read the definition, but let us just try to understand this once again, because of course you have covered this at the intermediate level. So what is audit is, number one, independent examination. When I say independent, guys, this simply means that auditor has to be independent. When I say independent, it means he has to be free from all the influences, he has to be unbiased. Okay, simply, if I put it in simple manner, if I happen to do the audit in a company wherein my father is a director, I won't be independent. Even if there are some issues in the financial statement of the company, I might still say the financials are okay, right? So that means I did not act independently. But the auditor, when he does the audit, it has to be an independent examination of financial information of any entity. It can be any entity, guys, whether it can, let's say, profit making, it can be a NPO, NGO also, irrespective of its legal size or form. It can be a big company, small company, it can be a company, it can be an HUF, it can be an LLP, it can be a society, it can be a trust, it can be a partnership firm, it can be association of persons. So it can be an any entity, the status of the entity, it can be any possible entity you can think of. Okay, when such an examination is conducted with a view to express an opinion thereon, I mean, the auditor will check the financials, and of course he is going to express his opinion. What kind of opinion will he express? That whether the financial statements that he has just, let's say, verified or checked, whether it is giving true and fair view or not, whether it gives true and fair view or not. Okay, this is just a simple definition, though I am going to cover each and every word again in the upcoming words that you can see. We are going to cover each and every word, but this was a simple definition about auditing. But what I'm going to focus in today's session is about the audit process. Okay, so what is audit process? Audit process simply means the starting and the things that you do right from the start of the audit till the end of the audit. Okay, so this is audit process. Audit process simply means what? Sequence of activities performed in the formulation of audit opinion. What all things will you be doing in the entire subject, in the entire thing process of audit? Okay, so we can say sequence of activities which the auditor will be doing. So what is the sequence? Let's understand this. So number one point is appointment of auditor. First thing, of course, guys, before even you can start your audit work, your appointment will be made. Appointment of auditor is the first thing in the entire let's say audit stages, the different steps or stages in audit. Okay, so first is appointment of auditor. Let's be quick here, but yeah, Guys, if you are able to recall, appointment of auditor is also something which is mostly will be governed by statute. Now, for example, you are a company, you are my client, you are a company. You cannot just go to any chartered accountant and appoint them, as an auditor. Of course, you have to follow certain formalities, you have to do certain formalities, whether it is a first auditor of the company or a subsequent auditor of a company. You need to file uh, the details, let's say with the ROC. All the formalities needs to be done, right? So there is a procedure for appointment of auditor. But let's say if I talk about partnership firm, let's say they have, this partnership firm has a turnover of 8 crore rupees, and they are required to get tax audit done under section 44AB of the Income Tax Act. So if now they are supposed to get a tax audit done, you know as such, uh, in the partnership act also, or let's say in the income tax act also, there is no way mentioned as to how you have to appoint the auditor. So in that case, probably, let's say if you are a firm, you can go to any chartered accountant and he can be called as the auditor of your firm, because there is no procedure and formality as such for appointment. Okay, so what I'm trying to tell you here is appointment of auditor will mostly, because if you talk about companies primarily, it is governed by the law, it is governed by the statute. Okay, so simple thing, appointment of auditor. Now let's say, guys, you have appointed me. If you were a company, you have followed all the procedures, formalities of the Companies Act, and you have appointed me as the auditor. Okay, now once my appointment is done, I need to be very sure about the objective and scope of audit. When I say objective of audit, of course, guys, let's say I need to be very certain, very much sure. Let's say you are a company. So do I need to do the audit under statutory audit under Companies Act, or have you appointed me for tax audit to be done under the Income Tax Act? So I need to be very clear on this, right? So as an auditor, I need to know the objective and scope of audit. Okay, when I say scope of audit, guys, scope of audit is nothing but what are the areas that I have to check, what are the things that I have to see. So when I say scope of audit, okay, will my scope of audit be different if it is a company audit under Companies Act as compared to tax audit under the Income Tax Act? Will my scope of audit be different? The answer is yes. Of course, scope of audit means what all things will I check. So when I'm doing the statutory audit of a company, I would be checking things more with respect to compliance with Companies Act. On the other hand, when I'm doing tax audit, I would be checking on things with respect to let's say compliance with the taxation, the laws of taxation more, right? So the scope changes. In simple language, again, if I say scope means what? The things that you have to check in the audit. Okay, now if I make you walk through the topic, yeah, we have a definition also. All the definitions what I have done here is I have also mentioned it here. So what is scope of audit? Let's see. It says determination of range of activities and the period of records that are to be subjected to an audit examination. This simply means range of activities means what all things, what all areas are you going to check in the said audit. Okay, and guys, if I talk about audit of financial statements, when I'm checking your financial statements, when I'm auditing your financial statements, what is my objective? My objective is basically to give an opinion on such financial statements. So what would be my objective? My objective would be to give an opinion on the financial statements, whether the financial statements is giving what kind of view, true and fair view. Okay, so I'm again going with the audit process. Number one was appointment of auditor. Second is basically once I'm appointed, I have to determine the objective and scope of audit. Fine. All right. Now, once again, when the objective and scope of audit is determined, the third thing that I would do in the audit process is understanding of the client. I would try and obtain understanding of the client. Okay, including their internal controls. I'm very sure you must have heard about the word internal controls, but yeah, I'm going to discuss it briefly here. Obtaining an understanding of the client, including their internal controls. Now, what does it mean? Please understand. Guys, let's say again, You have approached me to do the audit of your company, so I need to know your company. Before even I can start with the audit, I need to know your company, whether your company is a manufacturing concern, whether it is a service oriented company, whether you are into a trading business. If at all you are into manufacturing, what is it that you are manufacturing, how is your sales process done? All these things I should be knowing about you. This means know your clients. When I say obtain understanding of the client, it means I need to know the ins and outs of your business. Okay, imagine I am an auditor, you have appointed me as an auditor, okay, and then I you are a software development company, and then upon checking your financials I tell you, I cannot see fret outwards here. So of course this would mean what? I don't even know the type of transactions that would be there in a software development company. Software development company would never deliver softwares through the transporters. How can I expect freight outwards in the financials of a software development company? Are you able to understand this? So what I'm trying to tell you here is, you need to know the ins and outs of your client before you can start the audit. So understanding the client, okay, and also at the same time you need to understand their internal controls also. Now, what do you mean by internal controls? Again, I'm not going to go into the technicalities in the entire chapter here. Okay, we are just going to discuss everything in very layman's terms. So when I say internal controls, guys, internal controls simply means it can be any process, procedure, etc., which management must have designed, implemented, or maintained in the organization, so that the chance of errors in the financial statements is less. Chance of mistakes, errors, frauds in the financial statement is less. So what is internal control? Ultimately, internal control simply means all those procedures, policies implemented by the management to reduce the chance of misstatements, errors, frauds in the financial statement. So this is called as internal control. Anything which management imposes, or let's say installs or implements in their organization to reduce the chances of occurrence of errors or frauds in the financial statement, it will be called as internal control. Okay, now for example, probably I'll try and give you some example which will help you understand the concept better. So let's say, uh, again in very layman's terms, if I say, uh, all of us must be having antivirus in our laptops, right? So having antivirus in our laptop is a control. Why do we have antivirus in our laptops? We don't want any unwanted viruses or bugs to come in our, let's say, laptops, right? So we have a control in the name of antivirus. When you do a banking transaction these days, the banks would send you OTP. Why would a bank send you OTP? Because the transaction may be done by some other person also, a hacker also. But then when the OTP is sent, it is an extra care, extra control which the bank has now implemented. OTP will only be sent to your registered phone. So even if a hacker is trying to access your bank account, he will not be able to proceed further without giving the OTP. So it's an extra control. Why did management of the bank have this control? So that they don't want any unauthorized person to access a particular account. So again, this is a control. So I just gave you some random examples of controls. You enter a showroom, you enter a mall these days, there are so many CCTV cameras. Again, it is a control. Okay. But now when I talk in terms of audit, what can be the examples of control? Let's say, for example, guys, I'm doing the audit of a company, and they have this control that all transactions, all, let's say, payments, all payments above 10,000 rupees, they feel 10,000 is a big amount, so all payments above 10,000 rupees, the manager signs and approves it, then only the payment is made. So signing or approving of those payments is a control. Yes or no? So why are they having this control? Because they don't want any fictitious payments to be made, or let's say they don't want any payments. Just a moment, guys. Okay, so they don't want any payments to be made to persons who are actually not authorized for it. Okay, so that is why all this. Yeah, so that is why all these controls are there in place. Okay, so who implements this controls? Try and understand. It is implemented, designed, implemented and maintained by management. It's not the auditors. Okay, management implements the controls. Now, as an auditor, why are you interested in understanding their internal controls? Because if you know that, okay, in this particular organization the internal controls are good, let's say if you already have this idea that, okay, in this organization the internal controls are good or let's say bad, probably you will have an idea as to the chances of errors or mistakes in the financial statement that they have. So I just want to ask you guys very simple question, that let's say if a client has good internal controls, the chances of errors or mistakes in the financial statement would be less, yes or no? If internal controls of an organization is good, okay, if internal controls of an organization is good, guys, what is happening? Yeah, so if internal controls in an organization is good, the chances of misstatements, the chances of mistakes, the chances of errors in their financial statements would be what? Low. Do you all agree with this? Okay, yeah, so this is the reason, this is one of the reasons why before even you start the audit, what you are trying to do here is you are trying to assess their internal controls also. Okay, now only after this, once you know the client, once you have a fair understanding about their internal controls, you are going to be in a position to assess something called as risk of material misstatement, a word which you must have gone through so many number of times in your CA intermediate. Risk of material misstatement. Okay, so you are going to assess the risk of material misstatement. Now, what is risk of material misstatement? Please understand this part. Risk of material misstatement, I have a topic here. Risk of material misstatement is what? The risk of material misstatement refers to the risk that financial statements are materially misstated and do not present true and fair view. Financial statements are materially misstated. This simply means, when I say materially misstated, it simply means that there are some errors or mistakes in the financial statement. Please understand, guys, risk of material misstatement means this word. This is nothing, it means the chances or the probability of misstatements in the financial statement. Misstatements means what is the meaning of the word misstatement, guys? I have this word here. Misstatement means what? Let us read the word misstatement. It says when an item or information is wrongly stated in the financial statement. Any item or information is wrongly stated in the financial statement, it would be referred to as what? Misstatement. Now if I put it in very layman's terms again, guys, if let's say uh, okay, I bought this particular AC. This is an AC here. I bought this particular AC in the organization. Okay, and rather than capitalizing it, they have charged it into P&L account. So is this a misstatement? The answer is yes. Okay, let's say I'll give you a few more examples. Let's say the price of this AC was 50,000 rupees, but by mistake in the books they have only charged 5,000 rupees. They have capitalized it, but the amount is only 5,000. They missed on the last zero. Okay, so rather than 50,000 they have capitalized only to the tune of 5,000. Is this a misstatement? The answer is yes. So what is misstatement? When any item or information is wrongly stated in the financial statement, it is referred to as misstatement. Okay, now it can be either because of fraud or error. If somebody intentionally does a misstatement in the financial statement, we call it as a fraud. So what is fraud? Intentionally misstating the financial statements. And when the mistake in the financial statement is unintentional, of course it would be called as what? Error. Okay, so very basic things. All right, what did I tell you guys? What is misstatement? What is misstatement? Please understand, please be very attentive now. What is misstatement? Misstatement means any item or information which is wrongly stated in the financial statement, which is not correctly stated in the financial statement. Okay, now in simple words, let's say, again, I'm just going with the very very basics. Okay, let's say the company has valued their inventory. The company has valued their inventory on the basis of LIFO method. Okay, whereas what is allowed is, let's say, as per the accounting standard also, if I say what is allowed is FIFO and weighted average, so will it be a misstatement? As per as per the accounting standard, the what is allowed is what, either they can follow FIFO or weighted average, but the company has followed LIFO. Is it a misstatement? Yes, I'm waiting for your answer, guys. Is it a misstatement? Yes, everyone is saying yes. Yes. So what I'm trying to convey by this particular example is, please understand, we'll go with the technical definition of misstatement. It says, technically, misstatement includes any difference between what is required by applicable FRF. FRF now means what? Financial reporting framework. Whatever is required by financial reporting framework and what is included or omitted from the financial statements. So in simple words, what is misstatement, guys? Again, misstatement means what is required as per FRF, financial reporting framework, and what has been actually given to us by given in the financial statements by the management. If there is any difference between the two, it will be called as what? Misstatement. FRF means what? Financial reporting framework. Okay, now please understand, guys, management of a company, they cannot just prepare financial statements on a random basis. They have to follow certain set of rules and regulations. So these rules and regulations which they have to follow when they are preparing the financial statements would be called as financial reporting framework. Okay, now for example, in India we have the Ind AS, we have the accounting standards, we have the Schedule 3 of the Companies Act. All these are examples of financial reporting framework. If I talk about the FRF, internationally we have IFRS, we have US GAAP, we have all these can be the examples of FRF. Okay, so what is FRF? FRF is basically the set of rules and regulations which management has to follow when they are making their financial statements. Okay, and guys, if there is any difference between what is required out of an FRF and what management has given, it will be called as misstatement. Okay, okay, so I hope the word misstatement is clear. And I told you misstatements can happen either because of two reasons, guys. It can be either because of fraud or it can be because of error also. Okay, anyways, now again we have a very important word to cover: material. So in the entire subject of auditing, you'll always come across this word as material misstatement. Okay, not just misstatements, but we'll always focus on the word material misstatement. So what does the word material mean? Okay, so all of you know this, but let us quickly understand the concept. It says misstatements in the financial statements are material when they can reasonably be expected to influence the decisions taken based on those financial statements. So when I say the word material, what does it mean, guys? Material means an item in the financial statement will be called as material when they can influence the decision of the maybe the users of the financial statement. For example, let's say, I'll put it in this way. I am a prospective investor. I wanted to buy shares of a company, but now because of some misstatements in the financial statement which is very big, I have decided not to invest. So I have changed my economic decision here. Okay, so what is material? It simply means when it affects the users or influences the decisions taken based on those financial statements. If it impacts my decision making, it will be called as material. Okay, now again, going with the very basic concept, please understand that when will I call a misstatement to be material? Either, okay, I'll give you a few examples. For example, let's say, guys, if the financials of a company, the total is, let's say, 10 lakh. The total of the asset side is 10 lakhs, and out of this 10 lakhs they have 8 lakh as inventory. Out of the 10 lakh total assets that they have, 8 lakh is inventory, and now there is a misstatement in inventory. Will you call this as material? Out of 10 lakh balance sheet, 8 lakh is inventory and there is a misstatement in inventory. Will you call it as material? The answer is yes. Why will you call it as material? Because the amount is very big. You are regarding this as material because of the magnitude. Yes, 80% of their total asset. I mean, magnitude wise, it is huge. So hence it is material. But you have to remember, guys, it is the concept of materiality, it is not just decided because of the magnitude, but sometimes also because of the nature of the item, on the basis of nature of the item. Now, when I say nature, let's say in this particular financials, okay, uh, there was, let's say, an amount of only 8,000 rupees, okay, which was given by the director of a company to his son. 8,000 rupees was given by the company to the director's son. Okay. Now the amount is not big. 8,000 is still okay. But because of the nature of transaction, see, the shareholders put in their hard earned money in the company, and all the money put in by the shareholders, the director's son is enjoying it. The director, because the directors are, let's say, management of the company, they gave it, one of the directors gave 8,000 rupees to his son in the form of loan or whatever it is. But don't you think, even if the amount is very small and petty, the shareholders should know about it? And the company, they did not, let's say, as per Ind AS 24, or let's say as per AS 18 related parties, they did not disclose about this aspect in the financials. Will it be a misstatement? I want an answer from you. Will this be a misstatement, yes or no? Yes, of course, yes. Why? Because it's not just because of the magnitude, but because of the nature of transaction. Okay, so please understand, guys, that materiality, an item can be called as material when it's not just because of the magnitude, but also on the basis of nature of the item. Okay, in very layman's terms, guys, if I say, let's say, guys, this watch, okay, this watch of mine, let's say it is of 3 lakh rupees, let's say. Okay, now 3 lakh is a big amount, so of course, this is something very material for me in terms of magnitude, because it's a 3 lakh rupee watch. But let's say, guys, this watch, these days, if you buy it, you only get it for not even 3,000 rupees. Okay, and I have got 10 different watches, but please understand, even though the value is 3,000, this watch was given by my grandfather to my father, and then my father gave it to me. Even though the value is, let's say, 3,000, not even 3,000, let's say 300 rupees. As of now, in the market also, you go 300 rupees, you'll find it. But this watch is going to be very special to me now. This watch is going to be super material for me. Why? Because it's not just about the magnitude, because of the nature also. Are you able to understand? So please understand, please be attentive here, that materiality will not be just because of the magnitude, but also because of the nature of the item. Okay, now a very important line that you have to understand. I was trying to discuss the concept of risk of material misstatement with you, and then I discussed so many words. I discussed misstatement, then I discussed the word fraud, error, and then I tried to make you understand that what is material misstatement. Okay, guys, you have to understand that in any financial statement there will be misstatements. Okay, as an auditor, of course, we have to find those misstatements. We have to find those misstatements. But understand this point, that it will not be possible for us to find or detect all misstatements. Hence, when we do the audit, our focus is only on what kind of misstatements, guys? Misstatements which are actually material, which will influence the economic decisions of the users. Okay, so please understand, there might be a lot of misstatements in the financial statement, but as an auditor, guys, we shall only be focused on detecting what kind of misstatements? Material misstatements. Okay, all right, so we have discussed these words, but now coming back to the point, risk of material misstatement. Please understand, you have to be very clear. I'm uh, you know talking in terms of a layman here, that misstatement, material misstatement, okay, and risk of material misstatement. These are two different things. Please understand. Material misstatement, or let's say misstatement, it means that there is a misstatement in the financial statement, let's say. And risk of material misstatement is the chance. It's about probability, guys. The chance, or let's say probability of a misstatement happening in the financial statement. Okay. So in simple words, try and understand, guys. I now want you to answer. If you find that the internal controls in an organization is adequate, it is good, okay, then the chance, the probability of misstatements in their financial statement, will it be high or low? If you feel that their internal controls is good or adequate, the probability of misstatements in the financial statements would be low. Yes. So in simple words, can I say the chance of material misstatement would be low? That means risk of material misstatement is low. Are you all okay with this? Yes. Yes, everyone is writing low. Fine. Yes. All right. So that is why, yeah, that is why, again, guys, if you go back to the main topic that we were discussing, we have covered the four stages. We have covered the four steps basically in the audit process. What are the four steps? Again, number one, appointment of auditor is done. Second, once I am appointed, I need to know the objective and scope of audit. Objective is basically to express an opinion, and scope of audit means what all things, what all areas I need to check in the audit. Okay. Third is obtaining an understanding of the client and its environment, including internal controls. So I would try to understand the client, its environment, including internal controls. And once I have an idea about their internal controls, about their kind of working and all, I would be in a position to assess their ROMMS. So I hope all of you are clear with this, that risk of material misstatement means the probability, the chances of misstatements happening in the occurring in the financial statement. Are you all okay with this? Everyone till this part? Okay. Now, guys, once you have determined, once you have assessed the ROMS, okay, once you have assessed the ROMS, then here also, guys, I would say that you have not yet formally started the audit. On the basis of the ROMS that you assess, you are now going to make a plan. You are now going to make a plan for your audit as to how you are going to proceed with the audit. So the next step is about audit planning. Okay. So what is it that we do in the plan, guys? When I say audit plan, it means that, I would plan the entire audit so that I'm able to complete or conduct the audit in an effective and efficient manner. I want to complete the audit in time. I want to make the audit effective also. I don't want to come up with a wrong opinion. I want to, if there is a misstatement, I would want to find the misstatement out. Okay. So I need to do a proper planning of the entire audit. Okay. Guys, I just want to ask you, okay, uh, will your plan be dependent on the ROMS assessment? Will your plan be dependent on the ROMS assessment? Yes. If let's say you have assessed a very high level of ROMS, okay, will your planning be more extensive, covering a lot of things? If you feel that there are misstatements in the financial statements, if the chances of misstatements in the financial statement is very high, okay, you feel this, you have assessed that the risk of material misstatement in the financial statement to be high, so will your planning be done accordingly? Yes, of course, you'll have to do a more extensive planning. In the planning part only, you'll have to think about it, include a lot of things. Okay. All right. Now, once you are done with the planning part, okay, so planning is basically an office work. It's not a field work. Once the planning is done, you have decided, okay, from tomorrow we shall start the audit. This is the team who is going to go and do the audit. Will be 4 persons in the team. These 2 persons will start with the asset side first. The other 2 persons will first see the liabilities portion. All this planning and all we do, right? And once the planning is done, of course, you are going to go to the client's place and do the audit. Now you will apply the different procedures to obtain evidence. So we call it as perform audit procedures. Point number 6 is what you are now going to perform audit procedure. So after planning comes what? Audit procedure. What is meant by audit procedure, guys? Audit procedures are process, technique, methods that auditors do, that auditors perform to obtain evidence, to obtain what? Audit evidence relating to an item in the financial statement. So whatever methods, procedures, techniques that you apply during the audit to get audit evidence with respect to that item, we call it as what? Procedures. Okay, now in very simple terms, guys, again, let's take any item on the financial statement. Let's take land and building. The value is, let's say, 5 lakhs. Okay, this is appearing in the financial statements of my client. I want to check this aspect. Now I'll apply different procedures, right? Let's say I apply procedure number 1, which is physical verification. Okay, so physical verification, by doing a doing a physical verification is a procedure. What kind of evidence will I get? I will get an evidence that, okay, this particular building exists. So I'll get an evidence with respect to existence. Okay, but only by seeing the building, only by, if my client makes me see, okay, this is our building and hence it belongs to us, of course this is not proper evidence. Okay, they might show me Eiffel Tower one day and say that this belongs to me. I'll not believe it, right? So I'll have to apply other procedures also. So let's say now the second procedure which I would want to apply here is, I have seen the building, it exists. Okay, now I would want them to show it to me that, okay, they are the owners of this building. Okay, so maybe I'll check their, let's say, title deed or ownership documents. I'll check their title deed. When I check the title deed, this will give me an evidence with respect to what? The ownership. That, okay, the building is there and it also belongs to this particular company. Okay, I would also want to apply more procedures. Let's say, okay, the building is there, it is in your name, I agree, but how will I get to know that its value is 5 lakhs? So maybe I will ask them for a certificate, valuation certificate, let's say, from some agent. So this is going to give me an evidence about what? Valuation, that the carrying 5 lakh rupees is okay. So what I've done here is, guys, please understand, I've applied 3 different procedures. I've applied 3 different procedures, and on application of these different procedures, it gives me evidence with respect to different things: existence, ownership, valuation, etc. Right? Only after applying these procedures, and probably then I'll conclude, I'll give a conclusion, I'll come to a conclusion that, okay, the land and building is giving true and fair value. That means it is not misstated. Okay, so after applying all the procedures, I get evidences. I have got so many evidences here. Let's say I got evidence 1, evidence 2, evidence 3, and when I collectively assess these evidence, I draw a conclusion. Let's say that the land and building is giving true and fair value. Okay, so this is what audit procedure is about. Okay, you plan the audit, and only after planning, once you go to the field work, once you go to the client's place to do the audit, you apply different procedures. Okay, at the intermediate level also, you have been going through this word that auditor is going to determine the nature, timing, and extent of audit procedures. Okay, so of course, which procedure to apply, when to apply, how much procedure to apply, it is a matter of auditor's judgment. Auditor will determine the nature, timing, and extent of audit procedures. Okay, but guys, what is it that we get upon applying audit procedure? Upon applying a procedure, what is it that we get? We get evidence, and on the basis of these evidence, we draw conclusions. Right? Now, you have also learned this at the intermediate level, that the evidence which the auditor obtains, it needs to be sufficient and appropriate. You have covered this already at the intermediate level. So upon applying procedures, what is it that we get? We are going to learn about audit evidence. Okay, so I am still in the audit process, guys. We are still covering the stages of audit. If you can see, after doing the audit process procedures, okay, after performing audit procedures, what is it that the auditor obtains? He is going to obtain audit evidence. And what kind of evidence, guys? He is going to obtain sufficient and appropriate audit evidence. When I say the word sufficient, sufficient means, all of you know this. Okay, sufficient means it is about quantity, and appropriateness is more about what kind of evidence? Quality. So here, let's say, guys, I have obtained three evidences. It might be sufficient. Okay, it might be sufficient. Quantity wise, it is okay. But let's say the ownership papers, documents, title deed, they have been showing only photocopies. When I ask them to show me the originals, they are not in a position to provide. They are not providing me the original. So I'll not say that I have obtained quality evidence here, because photocopies are generally less reliable. Okay, so as an auditor, guys, you have to understand that whenever you apply audit procedures, you have to obtain both sufficient as well as appropriate audit evidence. Okay, we are going to discuss more about this in the relevant standards, but for the time being, what did I tell you? That sufficient is about quantity and appropriate means about, it's more about quality. Okay, all right. And then on the basis of the evidence, okay, we have it written here. Okay, sufficiency means what? Quantity, and appropriateness is about quality. Okay, and on the basis of this evidence, the auditor will draw conclusion. Okay, guys, please understand. Okay, so let's say, uh, for land and building, he applied three procedures, obtained three evidences. What are the evidences? E1, E2, E3, and from these three evidences he drew a conclusion. Likewise, let's say we have inventory. For inventory, he applied procedure 1, procedure 2, must have got some evidence 2, and from these evidences he has drawn certain conclusions. So he will draw conclusion about each and every item of the financial statement, whether that item is giving true and fair view or not. Okay, and when each item of the financial statements when each item of the financial statement is, let's say, giving true and fair view, then probably I will give a opinion on the entire financial statement. I'll now express an opinion on the entire financial statement, whether the entire financial statement is giving true and fair view or not. Hence, I would conclude my audit process by giving opinion. So you have to draw conclusions, and then finally you form an opinion on the basis of conclusions, and then issue your audit report. Of course, all of you know this. You must be going to the office. You would never give your opinion verbally. It has to be uh, uh, of course in a written format, and the place where you, the document wherein you give express your opinion, we call it as audit report. Okay, so these are the 9 stages and steps of the entire audit process, guys. Again, let me just quickly repeat. Number 1, appointment of auditor will be done. Then the objective and scope of audit needs to be determined. Third is, you need to understand your client, the entity, and their internal controls as well. And then on the basis of your understanding of the client and their internal controls, you would assess the ROMS, risk of material misstatement. Okay, once this is done, you would sit down again, just plan the entire audit, and then go to do the actual audit. We call it as field work. When you go to do the actual audit, you will apply a lot of audit procedures. Upon application of audit procedures, you are going to obtain evidence. Now you have to keep in mind that as an auditor, when you obtain evidence, it has to be sufficient and appropriate audit evidence. Based on these evidences, you are going to draw conclusion about each item of the financial statement, and then ultimately be in a position to give or express an opinion on the entire financial statement. Okay, now, because we are talking about the word opinion, I would want you to understand, guys, in the concept, in the subject of auditing, in the when you do the audit, you are always going to give an opinion. You would never issue a certificate. Please understand this, guys. When we do an audit of financial statements, we give an opinion that, okay, as per our opinion, the financial statements are giving true and fair view. We never give a certificate. Please understand, opinion doesn't mean certificate. When I say certificate, certificate would mean what? That beyond any doubt, okay, there is no second thought about it. Now, for example, the CA intermediate marks that you got, or let's say your 10th or 12th mark sheet that you have, it is a certificate, right? They gave you a certificate that you have passed. This means there is no second thought about it that you have not passed, right? But when I say opinions is totally different, guys. Opinion, let's say I am an auditor, I am a chartered accountant, there is one more chartered accountant. his opinion can be different than mine. But had it been a case of certificate, okay, certificate, both of us would give same certificate that the student has passed. So there is a difference, please understand. Certificate means that there is no second opinion or thought about it. But opinion is a personal thing, okay. One auditor would say that the financial statements are giving true and fair view, the other might feel it is not giving true and fair view. So please remember, in case of audit, we don't give certificates, it is an opinion that we express, okay. So opinion means one's point of view, and certificate means establishing a given fact, okay. So auditor will generally issue opinion. When we do the audit, we always give what? Opinion, okay. In very layman's terms, I generally give all these examples to see intermediate students. Guys, when you go for a movie, there is a certificate from the censor board which comes before the movie starts, okay. Whether it is a universal movie or whether it is UA movie or it is an adult movie. So they give a certificate. I mean, there is no doubt about it that okay, it is a universal movie, or if they say it is an adult movie, it is adult movie. There's no doubt, second thought about it. But after you watch a movie, what your friends give you a feedback that the movie was good. Some might say movie was good, some might say the movie was not good. This is opinion, okay. So please be clear on this part, that in audit, the auditor will express opinion and he is not going to issue certificate, okay. Now what kind of opinion? I told you this opinion, of course, he is not going to issue verbally. He is going to express the opinion in a written format. So he is going to give opinion in which report? In a report which we call it as audit report, okay. Now because we are discussing on the word opinion, let me tell you guys, in the entire subject of auditing, we shall learn about 4 different opinion, okay. So the first opinion that we are going to discuss is unqualified, then we can have qualified opinion, then we can have disclaimer, and finally we can have adverse opinion as well. So what are these opinions? Let us be quick here. Unqualified opinion means, let's say, when each and every item of the financial statement is giving true and fair view, that means there is no misstatement, no material misstatement, then I would say that the entire financial statement is giving what? True and fair view, okay. So when I give an unqualified opinion, that means I am issuing a clean opinion. That means all the elements, all the items of the financial statements are giving true and fair view, okay. It says that the financial statements of an entity give a true and fair view, and all the information, everything is giving true and fair view. Hence I am giving what kind of opinion? Clean opinion. But there might be certain case, guys. Let's say, I'll give you example. Let's say I check the financial statements of the company, and each and every item of the financial statement is giving true and fair view, each and every item. But only the item of inventory, what the management has done is they valued it on the basis of LIFO. Rather, it should have been on the basis of, let's say, FIFO or weighted average, right? So there is a misstatement. Now, because of this one misstatement, it would be very, I should say, it would not be wise on my part to say that the entire financial statement is not giving true and fair view. All the elements, other elements are okay. It's just that the item of inventory is not okay. So in this case, I'll give a qualified opinion. Qualified means what? That the entire financial statement is giving true and fair view except for the item of inventory. So I'm adding few remarks, reservations, qualifications here. I am saying that financial statements are giving true and fair view except for the item of inventory, which is stated on the basis of LIFO method. So I have added a qualification, I have added a remark here. Hence it is called as qualified opinion. So what is qualified opinion? When the auditor is not satisfied on some matters, he is satisfied on most of the matters, but let's say he's not satisfied on some matters relating to financial statement, but satisfied with all other matters, he is going to issue a qualified opinion. Fine, it's easy, okay. Disclaimer of opinion, guys, is an opinion when I as an auditor, am not able to obtain sufficient and appropriate audit evidence. So I tried doing the audit, but I'm not able to obtain sufficient and appropriate audit evidence. In this case, I would issue disclaimer of opinion. Now, for example, I went to a client's place to do the audit, and I told them to give me of course, the books of accounts, the underlying financial information. But they told me that all their books of accounts, etc., are seized. The laptop also, wherein, or the system where they kept their books of accounts, etc., everything has been seized by the income tax department. there was a raid in their premises by the department a week ago, and everything has been seized. Now when all the books of accounts, all the underlying documents have been seized by the department, how as an auditor will I be able to do the audit? So the client tells me, okay, sir, you take photocopies and you do the audit. No, I'll not rely on the photocopies. So maybe because the client doesn't have his books of accounts, I'm not in a position to do the audit. I'll not be able to obtain sufficient and appropriate audit evidence. Hence, in this case, I'll give what kind of opinion? Disclaimer of opinion. Or let's say I went to the client's place, and the entire premises, there was a fire 2 days ago, and entire premises got burnt, all books of accounts, backup, everything, they did not keep proper adequate backups also. So everything got burnt and nothing is accessible now. So in this case, I'll not be able to apply any procedure and obtain sufficient and appropriate audit evidence. Hence here I would disqualify, I'll give a disclaimer of opinion. Okay. And finally, the last opinion which the auditor may give is when all the items in the financial statement, something or the other is wrong. Okay, you go through the land and building part, there is some issue. You check the inventory, some issue. You check cash in and some issue. Debtors, there is some issue. You come to the liabilities part, loan, some issue is there. P&L part, lot of issues are there. So in this case, when you feel that lot of items in the financial statements are misstated, so here probably you will say that the financial statements are not giving true and fair view. So what is adverse opinion? When an auditor expresses an opinion that the financial statements are not at all giving true and fair view. So here, when the financial statements are not at all giving true and fair view, I would say I would give what kind of opinion? Adverse opinion. Okay, all these things I'm very sure you have done everything at the intermediate level. I just wanted to make you revise and brush up the concepts again, right? So if you can see, we have covered the entire topic of audit process, the various stages and steps of audit process. Okay. And all these words, risk of material misstatement, fraud, error, I think it is very important for you to understand. We just missed out on this word true and fair view. Of course, you all know this, what it means, but true and fair would simply mean, guys, true, the word true is basically with respect to whether everything is truthfully recorded in the financial statement. Okay, so true word is basically about if everything is truthfully recorded, and fair is more about what? Presentation. Okay, whether information is presented properly or not. Let's say, guys, I'll just give you one example. I bought this AC for 50,000 rupees, and they have recorded in the books to the tune of 50,000, but rather than capitalizing it, they have charged it into P&L account. They have recorded the true amount, but it is not properly presented. And for a financial statement, for us to give an unqualified opinion, it has to give both true and fair view. Okay, so true word is more with respect to the factual correctness, and fair word is more about presentation. Anyway, financial statement will give true and fair view, you all know this, only when they are free from what? Material misstatements. They should be free from material misstatements, then only we'll say that the financial statements are giving true and fair view. Okay, so with this, the basics of audit process is over. All these words which we used to learn in detail at the intermediate level, we have just brushed up the concepts. Okay, now if you see the next concept in the fundamentals that we will be doing is again about the basics of some standards. And after getting to know about the basics of these standards, we would also learn about some important terms which is used in the standards. Only after doing these two topics, then we shall be starting with our topics, the different standards on auditing.